Good morning and welcome to Business Today. We're going to count down to market opening. Let's first get you all the headlines this morning. Capital markets regulator SEBI clears several big proposals in its board meet last evening, lowers costs for both investors and mutual fund companies, replaces 30-year-old stockbroker rules in one of its biggest regulatory overhauls yet, lowers mutual funds expense ratios but also excludes taxes and government fees from them. Indian stock markets seen under pressure after big tech drags Wall Street down overnight over AI funding jitters. Oracle, Google and Amazon lead the fall over debt levels needed to sustain AI investments. Asian markets are also in the red. Investors nervously wait for US inflation figures later this evening. International brokerage Jefferies gives us a 20% upside to the Nifty in the next 1 year, sees the benchmark index at 28,300 by December 2026. Says the returns will come from BFSI, auto, cement, telecom and utilities. According to Jefferies, the big clincher will be corporate earnings. Pressure on the biggest American companies to disclose the impact of Trump's immigration policies on hiring. Shareholder group wants Amazon, Walmart and Alphabet to reveal how changes in the availability of skilled labor will hit their long-term performance. Focus is on the crackdown on H-1B visas and their enhanced fees. Google enters the credit card business, launches its first ever credit card globally in India with a Rupee card which can be linked to UPI accounts for payments. Also offers industry first instant cashbacks and rewards. Google has tied up with Axis Bank for the card. Meanwhile, Donald Trump has once again justified his tariffs, calling the word his favorite. In an address to the nation earlier this morning, the US president claimed they were responsible for a record $18 trillion in investments promised this year and said the US is once again the hottest country in the world.
I've secured a record-breaking $18 trillion of investment into the United States, which means jobs, wage increases, growth, factory openings, and far greater national security. Much of this success has been accomplished by tariffs. My favorite word, tariffs, which for many decades have been used successfully by other countries against us, but not anymore. Companies know that if they build in America, there are no tariffs, and that's why they're coming home to the USA in record numbers. They're building factories and plants at levels we haven't seen, AI, automobiles. We're doing what nobody thought was even possible, not even remotely possible. There has never, frankly, been anything like it. 1 year ago, our country was dead. We were absolutely dead. Our country was ready to fail. Totally failed. Now, we're the hottest country anywhere in the world.
All right, we're now joined by Shailendra Bhatnagar, Chief Analyst and Editor Markets, and Gaurang Shah, Senior VP Geochief Investments. Good morning, gentlemen. Let me kick off with you, Gaurang, because I actually want to pull up the Jefferies report, their outlook for 2026, pegging Nifty at 28,300 by December 2026. It's a 10% move, and they're saying the growth will be driven largely by corporate earnings, hot sectors, auto, and I know you like auto, cement, financials. They're also looking at telecom, real estate, utilities, and saying that equity supply pressures will be limiting index level gains. That's the verdict coming in from Jefferies right now. What's your take on the report, Gaurang? Are you going to tell me the 28,300's easy peasy?
Thank you so much, Aabha, for having me on the show this morning. Good morning to all the viewers of India Today and my good friend Shell, and to you. A small disclosure, all recommendations are a part of our research team recommendation from a long-term point of view on the fundamental side. Our company, Geojit or I, we do not have any financial interest, no conflict of interest, but we give advice to our, and no financial interest, but we give advice to our clients on similar lines. They might have their investment interest. So, Aabha, 28,300, my view is that we have the capability, capacity and the wisdom to do much better. I think in the next year, calendar year and financial year, a lot of policies that have been put in place in this year will start showing its positive effect. Along with that, the only lingering concern, Aabha, if you will, is the long stretched awaited tariff deal between US and India, and I'm not in absolute hurry. I think as much as time needs to be taken without any hurry, and see to it that it is beneficial for both the countries and of course the growth for both the countries. On the earnings front, I'm very much optimistic about much stable and growth oriented earnings for the India corporate. And in terms of certain data points, we are good on GDP, we are down on inflation, we are doing good as far as interest rates are concerned. And I think third, fourth quarter earnings and the budget, which will be unfolded very soon next year by the Honorable Finance Minister Srimati Nirmala Sitharaman, should give a lot of tailwind to our markets. So I think it's just a number. Honestly, I think we have the capability and capacity to do well. Sector-wise, my sense is banking and finance, autos, cement, cap goods engineering, defense, and FMCG, consumption-related themes will do well.
Okay, fantastic. And we'll come back to some of those in just a moment. But counting down to market opening. And remember, we're expecting a bump up. Also, SEBI announced major decisions yesterday after its board meet. A broad market reset from mutual fund fees to stockbroker rules to how IPO shares are locked in and disclosed to investors. The regulator has slashed and unbundled mutual fund expenses and overhauled 3-decade-old stockbroker regulations. Let's take a look at how the markets are opening this morning. We've got a slight negative downtick regardless on the screen, just a touch in the red, 25,787. We're probably expecting a slightly better opening, but currently still looking a little tepid in the markets this morning. Just pulling up some of those gainers and losers for you, but to complete also what I was saying about SEBI, and while of course they've overhauled all those regulations, they've also pushed brokers to show every cost and complaint trail to clients. IPO norms have been eased with a tech-backed system to mark pledged pre-issue shares as locked in, making life easier for promoters while tightening guardrails for public investors. And a revamped investor charter for brokers now forces clearer rights, timelines and a stronger grievance redress system across scores and online dispute resolution. So these are pretty significant rules, and we'll get Gaurang's take on this as well. Gaurang, it's a quiet opening, so I'm just going to pull up SEBI's key reforms and get your take on them. I would have thought the market would have been celebrating them a little bit more.
Well, Aabha, look, the growing number of interest among the retail investors is 100% and purely displayed with the kind of inflows that asset management companies have been getting. And the fact of the matter is, Aabha, that despite of the relentless selling by FIs and Nifty, so my sense is that bringing in transparency, clarity and discipline is the need. And I'm glad that these changes have been put in place, and some of the regulations were very, very old. You have to move with the time. Along with this, just about yesterday and day before yesterday, we saw 100% FDI opened up in insurance. So I think these are all bold and measured steps which will bring in a lot of clarity, discipline, and have more attraction towards the customer base and increasing that. The data that we've been seeing in the last couple of months, flows for the asset management companies, as more from the tier 2, tier 3 kind of cities and semi-urban and rural India. So if that's the kind of crowd that you're going to attract for investing into equity market via mutual funds, SIPs or lump sum investments, I think it is prudent to have discipline, clarity and regulation in place.
All right, let's also take a look at those opening ticks and pull up some of those movers for you. And it looks like Meesho is again making a lot of noise. Let's pull that one up for you. Remember, yesterday we saw a big bounce and there were quite a few buy calls coming in. Today, again, 7% higher. Remember, this is an extremely recent listing right now. But let's take a look at the weekly if we can, because we're looking, I think, easily at 13-14% for the week on a Meesho already. 36%, pardon me, 36% on a Meesho this week. Shell, good morning. Let's talk about some of these, movers and shakers. And Meesho, the markets are just going after this stock like nothing else.
Well, good morning to you, Aabha, and a very warm welcome to my very dear friend Gaurang. I have little or no faith in any of these research reports that are coming out on Misho or on the Nifty for two reasons. Misho in particular, these are all signs of stocks being distributed post IPO to retail investors by coming out with these glorious and reports promising sunshine for the next 1,000 years. It never happens. So this is just distribution.
So cynical.
And all of us
Shell,
will.
So cynical. It's actually double the IPO price. And yes, okay, maybe a word of caution there. But because he's being so cynical, I'm going to go straight across to Gaurang. Gaurang, are you in sync with Shell here, or do you see some light in perhaps some of the opportunity that is being seen in Misho and what it's delivered so far?
Well, I loved the statement made by Shell, sunshine for 1,000 years. That's wonderfully put, honestly speaking. But Aabha, look, 111 was the price at which the IPO shares were issued to the investors. And if you're going to run at the stock at current levels, I think you are possibly, being too adventurous. There is no need to be Robin Hood. खतरों के खिलाड़ी खेलने की जरूरत नहीं है आपको शेयर बाजार. So there are better stocks. I mean, look at I just saw yesterday some foreign brokerage house came in with a buy report and the target was, I think, 220 and it has already crossed 230 today. So as a disclosure, Aabha, we had come out with a subscribe recommendation on Misho for the IPO. It's more than doubled your investment in a matter of just 1 week, if I'm not mistaken. And from here on, one can expect a little bit of correction because the stock has been rallying for almost about 1 week. And right. Valuation is something that needs to be justified, and one has to be wary that there is something called gravity on this face of earth.
Okay, I like that. I think it was a slightly more fair assessment on Misho. But let me also pull up all the action on AMCs this morning because we're seeing huge volumes across. And remember, SEBI, again, as Gaurang also spoke about, has issued final mutual fund regulations for 2026. They're broadly neutral for AMC earnings. New TER framework introduces a base expense ratio with stat levies charged separately on actuals. Just showing you the gains this morning. BER limits reduced by around 10 bips to offset the structural change as well. And an additional 5 bips allowance for exit load schemes was removed. Brokerage caps were rationalized with cash market brokerage reduced to 6 bips, excluding levies. And sensitivity analysis indicating that the net TER impact of this will leave profitability largely unchanged. So some of those decisions from SEBI on the insurance bill leading to a big move across the board when it comes to the AMCs this morning. Let me get a more detailed perspective from you as well on that, Gaurang. Gaurang, on the insurance bill and the impact, I was going to get your perspective as well, if you can hear me.
Well, so, Aabha, like I was mentioning, regulations, discipline, transparency, clarity, I think it's the order of the day. And as far as let me give you a fair view about the Indian capital markets as to what we think in the next 3 to 5 years. So if you are of the opinion that the Indian capital market is going to grow at maybe 12-15% run rate or more, I'm talking about the indices, Sensex and Nifty. And within that, sectorially and stock specific can give better returns. And if you compound this for the next 3 to 5 years or maybe more, then you will get a fair idea as to where we are going to land up. In this, if your Indian capital markets are going to do well, Aabha, I think strong, fundamental, sound companies, whether they are platform providers, service provider or intermediaries, they will do well. With the changes that has been brought in last evening by the Honorable Chairman of SEBI, the reaction is that we are looking at AMC stocks being in the positive trajectory. We like 2 names over here, Aabha, HDFC AMC and Nippon India. These are the 2 asset management companies that we are positive on from a long-term point of view.
Great. Shell, let me bring you in as well. Of course, on the move we're seeing on AMCs this morning, as well as some of the other movers. I just want to point out Antony Waste Handling Cell. They've secured new contracts worth 1,330 crores and the stock is up 10%. Let me bring that one up for you. Just mark it. And then, Shell, going back to you on some of the moves that we're seeing across AMCs this morning.
Yeah, Aabha. So there was this fear in the market that the erosion in a TER, which is the total expense ratio for AMCs, their bread and butter, would be brought down to a manner which would be inimical to long-term, income and growth and profit levels. Well, SEBI has not moved in that fashion and provided enough cushion. So this is again buying that is coming back into HDFC, AMC, ABSL. You have NAM India 6% high on very strong volumes. So it's a relief rally that is coming in. And we all know 30,000 crore rupees coming in the form of monthly SIPs. Look at the oversubscription in ICICI Pru AMC that is about to list. So this is a sector where you have very, very long highways and very, very strong potential of financialization. So it's a win-win.
Great. So, we were expecting some move on the back of some of those SEBI's norms, and it's finally coming in when it comes to those AMCs. We're seeing action across the board there. And remember, we've also had other reforms this week with regards to the 100% insurance FDI, and we've also seen that play out as well. So overall, in terms of the kind of momentum we're seeing on the reform front, whether it be what's come in from SEBI, whether it's the insurance bill, this is really what's driving the market in terms of assuring them that things are moving forward. The reform agenda is something that is definitely a positive, as Gaurang also just elucidated there for you. Shell, what else are you tracking? It's 9:25. What's looking good to you?
Well, I'm looking at the rupee, and that's the pain point in the market. Again, 90.36, showing signs of further weakness, and that's pushed the IT index to 1.3% higher. For those who have a little bit of memory, we've been advising ITBs since 33, 34 rupees, and that's a trade that's worked very well. Strength in TCS, strength in Infosys, strength in Wipro, and look at where ITBES ETF from Nippon India is now at 42. Still is offering a lot of opportunity for long-term investors, but please consult your advisor before you step in. HCL Tech, days high. You have TCS, days high. Infosys, Emphasis, days high. And who can forget Vedanta? So going is good, Aabha.
All right, a few other brokerage reports. We've got BofA and an upgrade on Voltus. We've got JP Morgan with an overweight on Tata Motors. And Jefferies downgrading a Hero Moto. So closing comment on Auto Gaurang, because I know it's your favorite. And I know Aisha usually is the one that tops the charts. But we've actually got a downgrade on Hero coming in. Is it because it's, they're seeing demand fading is really what they're saying. But on the back of the GST momentum fading, what's your pick in the auto space? And would you agree with this assessment?
No, I'll beg to differ, very honestly. And we've been positive on autos. We continue to remain positive on autos. And, Aabha, I would also want to, it's very interesting. I think it's according to what I've realized, we are in the month of December and we are seeing new launches. This has not happened before, right? Because normally in the month of December, auto manufacturing companies, they normally come out with discounts and they defer their new launches to next year. Because if you launch it in December next year, it's kind of a mentality or approach that people have. So November, December, we've seen good number of launches. We are positive on two-wheelers, three-wheelers, four-wheelers, commercial vehicle manufacturing companies, and also a company called Electra Green Tech, which is a pure EV play. And of course, along with that, we're positive on batteries, tire manufacturing companies, we are positive on OEMs. So I don't think that there is any reason to worry from a long-term point of view. And my sense, Aabha, is that export market is now opening up as a big opportunity for Indian automobile manufacturing companies.
Yeah. All right, great. We leave it there. Auto, of course, in focus today, also on the back of all the Grab 4, Grab 6 norms that have been introduced in Delhi. EVs clearly seem to be the way to go. We leave it there. Thanks so much for watching. overnight global cues to live Dalal Street moves. We decode what matters for your money today, from stocks to sectors to the top business news. We've got your morning game plan covered. Watch me, Aabha Bakaya, as I bring you the opening bell action Monday to Fridays, 9:05 a.m. only on India Today.
From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Morning, ladies and gentlemen. Thursday it is, the weekly expiry of the Sensex falling heavy on the market. The rupee is also weakening, and that essentially means that you will have a downtick on the Nifty, but a very strong uptick on the IT index, 1.1% higher on the Nifty IT index. That is a sign of relief in the market, and that relief is also very, very focused. You have 727 stocks in the red, 2,000 shares in the 727 stocks in the green, 2,000 shares in the red. So it's looking really, really terrible for the bulls in the early part of the show itself. Profit booking in the media space 2% lower as far as the index is concerned. Realty, auto, all showing signs of good profit booking, 1.3% lower on realty. Auto is slipping 2% lower. Nifty, next Nifty, small cap index, mid cap 100 index, all of them slipping in trade. So that's the broader market, but AMCs and brokerages doing pretty well because the SEBI order on reducing costs for investors is not that difficult to manage as it was being presumed earlier. So you have a relief rally. Nuvama 4.3% higher, 7481. Look at the gains that you are getting on NAM India. This is a Nippon Life Asset Management Company, 6% higher, 920. This is the top gaining stock on NSE 500. Similarly, you have strength coming into Bombay Stock Exchange, 2.2% higher, 2675. Look at strength in UTI AMC. Look at how K Fintech is doing. These were all stocks in the capital market segment which were squeezed over the last 1 week ahead of the SEBI meet on fear that the cut in expenses which might be announced by SEBI would hurt bottom lines and therefore multiples and valuations. That hasn't happened, and that hasn't happened to that extent, and therefore you see a very strong relief rally coming in. Gains are few and far between. There are no stocks that have hit all-time highs. Volume buzzers are limited to AMCs and to some extent, losers. Look at Ola Electric, 8% lower, 31.7 yesterday. The promoter sold a part of his holdings to pay off his personal loans, and a fresh record low on Ola Electric. Banks showing signs of pain. Indian Overseas Bank down 7%, Titagarh Wagons down 2%, Hero Motors a downgrade coming in by Jefferies down 3.7%. So that's how the market is at this point of time. We are joined by Mr. Kush Godasara, managing partner at Invest Value. Namaste, Kush ji, a very warm welcome. How are you reading sentiment on Dalal Street?
Namaste, and thank you for inviting me on the show. Definitely, as you sir rightly mentioned, I was looking at the comparative charts. So while Nifty and Bank Nifty were making new highs in in recent past, broader markets like mid cap stocks, small cap index, they were nowhere near to their high in 2024. So there was a weakness in the bottom side of our market, and now that is dragging our even frontline stocks. So barring few stocks, as you mentioned about broking and IT stocks, I think all stocks are making a lower lows. If we break 25,730 on spot levels, which was support for last few weeks, and also there is a gap unfilled for the month of November around same levels, then we may see market coming down to 24,800. On the upside for intraday, 26,040 is a strong resistance, while overall if you look, 26,200 remains a hurdle. So I'm bit biased for downside momentum, but waiting for a confirmation below 25,720.
934, ladies and gentlemen, 200 points down on the Nifty Bank, 58829 for you, 72 points lower on the Nifty, 25,785, and there is little or no good things to talk about except the AMC space. Kush, what would be your favorite AMC at this point of time? We are also readying ourselves for the listing of ICICI Pru AMC in a day or so, maybe tomorrow.
For long-term investment, always I prefer Nuvama. I mean, they are doing very great work, even at the ground level. Few AIF are performing well. So Nuvama is something I'm focusing on. They are doing very good distribution of the wealth management products. So, and currently, if you look at the charts, also Nuvama is into consolidation phase since last few weeks. On the downside, 7,000 is a great support. On the upside, 7,600. So it's time to accumulate Nuvama for long term. Once we break 7,600 upside, we may see a good quick rally to 8,500.
Right. Aabha joins us on the show. Good morning to you, Aabha. Over to you.
All right, let's take a look at what else is probably going to see an up move on the back of earnings momentum coming in. Where do you see the action coming? Do you feel like we might see some amount of a revival when it comes to some of the FMCG names on the back of earnings? We'll also kick off the season with IT. What are you going to be watching out for?
I think I would be watching out for FMCG stocks. I guess we had a good quarter of many festivals. I think FMCG stocks would be in focus. My focus would be even on quick e-commerce space like Swiggy and Eternal, because there also we have seen good pickup of delivery orders. Secondly, for Eternal, if you look at district booking app, there are this season is generally for musician events, tours, or all over metros, mega cities. So booking values would be high. So I am my focus is on FMCG, and that too new age FMCG stocks. We can say like quick e-commerce stocks. So Eternal and Zomato are my favorite picks for earnings play.
All right.
Well, that's the market as of now. Let's just focus on the very few and modest gainers that are there in the mid-cap space. I'll get my attention to Indraprasth Gas and Mahanagar Gas. These are stocks now consolidating near 52-week lows. A view on IGL, Aabha. Kush.
Definitely, gas stocks are pretty much in a lower term, into downside momentum. But IGL since last 3 days have been picking up, but still we are facing a strong resistance at around 198. So if you're a long-term investor, definitely stay invested in IGL. But I believe fresh buying only about 200 if you are sustaining for more than 2 days. So I'm waiting for an upside breakout and sustainability, because in couple of years, we have seen the IGL gives a good move for say day or two, and they investors get trapped, and we again see a downside momentum. So it's better to wait for an upside breakout.
All right, let's take a look at Anthony Waste because that's still moving higher. We've got the stock was up about 10% on opening and it's now up 16% on the back of new contracts worth over 1,000 crore rupees. 18% as we speak. I don't know if you've taken a look at this one, Kush, lately. Anthony Waste Handlers. Would you like to kind of comment on this one?
Definitely, very difficult to comment at current levels because we have seen a good move today. But already, if you are holding the stock, technically, trading stop loss is around 485. On the upside, maybe 540 is where you can book your profits.
$940 at this point of time. It's only Aabha, the IT space, that is looking good, and of course the capital market space. Strength coming into Bombay Stock Exchange. Nice volume building up there. You have already 273 crores worth of shares on the Bombay Stock Exchange traded, 2% higher. There is in terms of gainers, Roto Pumps 10% higher, 186 crores traded. You have Anthony Waste, which you've already marked, now 17% higher. Very, very heavy volumes, 241 crores. That's on an order win. And of course, you have the entire AMC pack, UTI, NAM India, HDFC AMC, ABSL, all of them making their presence felt. So that's the market at this point of time. Another stock that I'd like to mark is a company called Prudent Advisory. This is amongst the biggest advisors of mutual funds, and that stock is now up 2.8%. Again, the fear was that the advisory costs would be brought down so much it would impact long-term financial performance. That hasn't happened to that extent, and therefore you see this relief rally. Aabha.
All right, that's on the AMCs. We were also talking about Misho, of course, and the kind of move it's seen today. Kush has touched upon some of the new age counters, and he seems to be quite confident there. Hero's got a downgrade coming in, and that stock's moving a bit lower. Let's get a call on Hero because, Kush, some brokerages saying that perhaps the GST impact won't last. But what do you think?
So I think GST 2.0 rally is over. Sales are over for the two-wheeler stocks. So definitely now everything will be get adjusted to normalization. So yes, we can even see this effect on TVS Motors and Bajaj Auto also. So I believe this correction is maybe very sharp for short-term traders, but for long-term investors this can be an opportunity. I believe around 50 to 100 is a good support. So as a long-term investor, I'm waiting for a dip, and I would be buying Hero. I believe they're doing very good in EV side also. So definitely not looking good for short-term traders. But once around 52, 5300, it would be again attractive for long-term investors. So if you're a long-term investor, sit on cash and be ready to invest around 50 to 100.
All right, that's move coming
942.
in on. Yeah. Go ahead, Shel.
There is a Aabha strength coming on Hindustan Zinc. I haven't checked the silver price since morning, and I'm surprised myself. Among the many things that I do early morning is the first look on silver. Let me get back to you. This is okay, down a third of a percent, 2,06,666. Well, that's the devil's number for you. Strength coming into crude oil. That's really important. Crude oil we need to track. That's because Venezuela and the US are now fighting, and as Mr. Trump says, the largest ever naval armada ever assembled is headed towards Venezuela, and therefore crude oil prices are up. Hindustan Zinc, ladies and gentlemen, and Vedanta. These two stocks in top shape from the metal space, doing very well. Aabha, to you.
Okay, it's a quiet market, but 28,300 on the index is what Jefferies is saying by the end of next year, which seems pretty doable given the pace of change that we continue to see. I think let's get a call on IT because that's important to track. While it may be slow and steady right now, but going to kick off earnings season and of course also always in focus on the back of what's happening in the US. So Kush, some of your IT picks before we wind up today.
Definitely, I believe, weakening rupee is going to be beneficial for IT stocks. And I think frontline IT stocks like Infosys and TCS are looking good as a defensive bet. Of course, they won't give you very much quick return. They are low beta. But yes, if you want to play safe over the New Year's Eve, definitely buy Infosys at current levels for earnings play. On the downside, around 1575 is a stop loss. Maybe by earnings announcement, we will see 1680. So low beta, but definitely a good buy.
Okay. And the market's continuing to be quiet, but I think we'll leave it there for now. Kush, thanks for joining us. And we'll, of course, come back at 10 o'clock and continue to track the action for you. Thanks so much for watching.